loans are skyrocketing, and the market seems to be on fire. All right. ARM loans are skyrocketing, and they're saying that the market seems to be on fire. Let's get into it, y'all.
The housing market is flashing red. Adjustable rate mortgages, the kind that helped blow up the economy in 2008, are now being used at the highest rate in over 2 years. Why? Well, mortgage rates just spiked again, up 20 basis points in a week. New single-family homes for sale in the U.S. surging to 500,000 in February, reaching the highest since November of 2007. But even with more homes for sale, buyers are pulling back. Spring is supposed to be real estate's boom season, but Anthony Pompliano, you say that we have a crisis on our hands. We need to treat it like one. What do you think the path forward is?
There's 4 data points that really show this. The median asking home price is up 6% to $424,000. That's $50,000 increase since the start of the year. The median sale price in America is up 3% to $383,000. But I think even more importantly, the typical home buyer monthly mortgage payment is up 5% year over year to $2,800 per month. And so if you think about those numbers, basically what you have is you have homes becoming more expensive. You have debt becoming more expensive. We're not building enough homes. And so naturally you have this squeeze that's occurring. But people also forget at that same time you have real wages falling. And
I don't think at all, not even a little bit, that it's the building of the homes, the building of the homes, building of the homes, building of the homes. I don't think it has anything to do with the building of the homes. You have millions and millions of homes available for sale. We don't need to build an exponentially a lot more homes. That is not the issue. Also, the main thing that tanked, because a lot of y'all wasn't outside during 2008. I just so happened to be a fully grown adult during 2008 that was affected heavily in Detroit, Michigan. I own more land than your whole family lineage, big dog. Absolutely, I do. It is not the building of homes. There are plenty of homes for sale. All right. The thing that helped tank the 2008 crisis is that they were approving people in order to get enormous fees and make a significant amount of money on the banking side, so much so that they started bribing government agencies to overlook whether or not they were doing things the right way or not. And they had a subprime mortgage lending crisis. That is the first thing. Subprime, meaning that people that really didn't qualify for the homes was getting qualified for the homes. And they were able to buy the homes without any job, any mortgage, any money down or anything like that. And so they jumped in head first, and the banks was happy to give you anything that you wanted because they was making an exorbitant amount of fees on top of it. This is when we came up with the whole term that the banks was too big to fail, because we couldn't lean back on anything like China as far as their manufacturing capacity because we didn't make much here in the United States of America. And the industry was largely a consumer purchasing type of industry. That's why they started giving out stimulus checks and having cash for clunkers and all of those Obama programs. And they had to bail out all of these companies and stuff. But the fact of the matter is we had a subprime mortgage loan crisis. And also people were getting any types of loans that they could just to say that they owned a home. And one of those types of loans that they were getting was called an adjustable rate mortgage. That means that the mortgage rate that you're paying adjusts according to whatever the interest rates is going on inside of the United States of America. Your mortgage can go up significantly and it can go down significantly. Anybody that is getting an adjustable rate mortgage, what the heck are you doing? They did. They approved way too many people. Building houses people can't afford is the equivalent of subscribing to an OF page. That's one way to put it. I know a few people that got ARM loans, and when that payment came knocking, they went to moving. Yeah, a lot of people like to justify it as, well, I'm not only going to I'm only going to be here this amount of time, or I'm going to refinance once I get some equity in a home, or I'm going to get this, whatever. A lot of people, I'm going to be honest with you, are just desperate to say that they are homeowners. People can't wait to say that they are homeowners. If you peek behind a curtain I'm going to put 3.5% down. Wait a minute. So you're going to put 3.5% down, and you're getting a bad mortgage deal, and you got a high interest deal, and you got to do PMI, which is private mortgage insurance. That basically is insurance against you defaulting because you're a higher risk buyer. Let me put you in the mind of the bank. The bank makes money off of lending it to you. All right? Meaning that they have to give out the money. They're trying to find, the bank's job is to find as many qualified buyers as possible. Keyword qualified. They want to lend you money. They have to lend you money. That is the way that they make money. They make money off the interest. They make money off of the service fees of the loans. They make money all across the board, rebuying, taking it back, resending it out to the people. The banks want to lend money. That is their business model. The main way that they make money is from the interest payments that you make on the loan. So when you go and pay your 30-year mortgage, or when you go and pay your adjustable rate mortgage, when you go pay your credit card or whatever, they make money off of the interest. If you look at your statement, it says this amount going to interest, this is amount going to principal. The bank don't want to be in the ownership game. The ownership game is for the people that actually want to resell the houses. The ownership game is for the people that actually want to hold on to the asset. The bank don't want the asset. The bank want to use the asset as collateral that you're going to pay the loan. That's why you don't have to get private mortgage insurance if you put more than 20% down. Because they know that you're less likely to default if you actually have equity into the home. Banks don't mind loaning you for supercars or hypercars if you can come up with the amount of money. If you can show that you have a decent credit score, which basically is your ability to pay it back on time. Number two is, you have to show that you have the income, the ability to be able to pay it back, which a lot of that, they don't even tell you to pull out your back in the day, they used to make you show check stubs. They don't really make you do that no more if you're getting a loan for a certain amount of money. It really don't even matter how much you ask for. Because if you can come up with 20%, right? Let's say you buying a supercar. For those of y'all that like to finance everything, let's say you buying a supercar and you put 20% down. Let's say that you getting a $400,000, let's say $400,000 car, right? You get a $400,000 car, you putting 20% down. That means you got to come up with $80,000 in cash. You got to get 1/5 of the purchase price. And you got a good credit score, which means that you've showed and demonstrated your ability to pay it back. And you coming up with $80,000, they'll give you money all day long. Here, take it. You know why? Because the actual car, which is not going to go down significantly in value, is the collateral. They know that if that car come back to them, which you're less likely to let that car go back to them because you already got $80,000 in it, even especially if it's holding its value, they know that you're going to pay that car. More importantly, they have collateral to where they can come and get that car and sell it at a bigger profit to recoup some of their investment if you decide to default on the loan. You're more likely to try to find a buyer to get rid of it and all of this stuff, but you putting that $80,000 down, then they can take the payment on whatever the interest is that you paying for that car. Same thing with the house. If you're putting 20% down on the house, you're going to get a lower interest rate, especially if you get a mortgage or a fixed rate that is less than 30 years. You got less than 360 payments, you want to do a 15-year mortgage, they're going to give you a lower interest rate. Somebody said, who's buying a $400,000 car? Well, DLC, I will tell you this, that the high-end car market, they don't have no shortage of buyers. It's the Nissans, it's the Altimas, it's the Explorers, it's the regular cars. It's the things where they try to make it more affordable and sell it at a volume. That's where they have the largest supply of vehicles on the market. Listen, if you go to the Porsche dealership and you go and look for a Macan, the volume producer, the one that you see all of the Asian women driving, you get a Macan, right, which is the smaller SUV. You can get a whole bunch of those. Go and order, try to get you a 911 GT3. Listen, not only is it hard to get one, You have to sometimes build a relationship by buying multiple different Macans and all of these other cars and Taycans and stuff before you can even get allocated. On the high end of the market, there is no shortage of buyers. Lamborghini, Ferrari, all of the high-end car makers, they are having record year after record year after record year, and it don't matter what the economy is doing. They are selling as many as that they can get their hands on. It's the middle of the market that's having the problems. High-end, no problems, because there is no middle class. It is becoming a hollowed-out middle class, and it is becoming a place of haves and have-nots. Go and do your research. Go and do your research. You're going to be paying a significant markup just to get allocated for a car. And you got to have a relationship. Go inside of a Rolex authorized dealer. They don't have no inventory unless you've already built a relationship and you can show that you've bought multiple different watches. Listen, the high end of the market, there ain't no shortage of people over in Monaco. Ain't no shortage of people over there getting to the money. The rich is getting richer than ever before. For whatever reason, y'all keep saying, oh, the market is tanking. For you, if you understand the money, if you understand the game, ain't nobody suffering at the top. The top don't suffer. Listen, the top don't lose. The thing that you got to figure out is, how do you get into the end club and what information do you need in order to be able to leverage and make money just like them? We suffer for a lack of knowledge. We suffer for a lack of understanding. We suffer for a lack of wisdom. The top don't lose. We make money going down. We make money going up. We're going to make money no matter what. If the market starts to tank, we look at it and we salivate and we say, you know what? It's a buying opportunity. We don't look at the market going down and saying, oh my God, I can't believe this. We look at it and say, ooh, buddy. People start losing their homes. You know who's going to buy them? Nobody care about, listen, I don't care what the interest rates are. I don't care what the market is doing. None of it matters. The only thing that matters is if I can capitalize off of it or not. Nobody, everything at the top, 911 GT3s, Vanquishes, Rolls-Royce Cullinans, $400,000 truck, ain't no shortage of people that's buying them. Zero. It is always going to be sold out. Lamborghini created a special application. They got a special app on the phone just for the people that got allocations. Never a shortage of people. Never. They got places that you can't get into that especially designated for financing for people that purchase high-end cars. I promise you. You think it's ever going to be a crisis? That's an opportunity. Opportunity to create new businesses, opportunity to snap up more land. What you think, they making more land? They ain't making no more land. They ain't making no more of it, big dog.
And so people basically can't figure out how to buy a home or keep up with what is ultimately the real inflation that they're experiencing. And so the reason why I say it's a national emergency is because the federal government really has to step in here.
Somebody said, as a CPA, I just can't justify that much for a car. They say the same thing about watches. You can't, but guess what? We can, because there's ways that you can actually justify it. Number one, most of the time, I'll tell you, my 911 is valued more than what I bought it for. It's literally valued at more than what I bought it for. And I can drive it and have fun with it. And I need to get rid of the money. Every watch that I've purchased is worth more than what I bought it for. And I get to enjoy it. And I got to get rid of the money.
Here. And if you go and you look at the housing problem, we can't build houses in America, not because of the federal government. It's because we're being held hostage by local city councils that are basically, parading around or masquerading around as politicians. But at the end of the day, what do they know about housing zoning? What do they know about housing rules?
What do you mean when you say you want the government to get into it?
I think that the federal government
made a mess of it.
I think that the federal government should step in and say that we are going to create either some sort of sandbox, some sort of safe zone, or we are going to actually put some sort of guidance out for these city councils. Because what ends up happening is, if you want home prices to stop going up so fast, build more housing.
I feel you,
what you can't do is you can't have people who they are not experienced, and frankly, they have a lot of times very big conflicts, right? If you go to the local city council, who sits on the city council? Usually people who are real estate developers or are sitting there, they own real estate in the jurisdiction. There's tons of conflicts of interest. And so if you want the housing rules to actually change,
just crooks.
if you want those housing rules to change, what you have to do is you have to create some sort of guidance. And so the local rules that are in place right now are not taking into account the fact that there is
if you can get yourself a Ford GT, it's one of the most coveted cars on the market, especially the newer ones. If you can get yourself a Ford GT, that is one of the cars that I'm going to hunt down. I will find one. I think Ford GTs, sometimes depending on the condition and the mileage, they can go for millions. 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 You know how many people jumped on a waiting list to get that thing?
Emergency in terms of housing prices. And so let's have some sort of framework that we can go and actually implement and allow people to build houses in America so that these house prices stop going up.
It's not an emergency to keep home prices propped up, though. I mean, if you want to make housing affordable, it means that prices need to come down. And nobody will admit that the inflated value of the home that you bought, wherever it may be, because literally
prices of homes are not going to come down. Let me just tell you guys that. The only way that you can have prices of homes come down is if you somehow, some way, artificially create a market and crash it all the way to the fucking ground. And the housing market is not going to crash, ever. It's not going to crash as long as you got the guardrails in place, as long as people are willing to pay for their houses, as long as people need a place to stay, and as long as you got institutional investors. The housing market is just going to be another buying opportunity. But the value of homes, I don't believe within the next 20 to 30 years are ever going to come down. They may stagnate. They may not appreciate as fast sometimes, but the value of these homes are not going to come down. People are just going to have to move. They're going to have to move. That's just a fact.
Every home on a coast is, despite the wildly out of control insurance costs, is overvalued. And so you can't tell the American people, well, you know, when you go to sell your house, you might not be able to get a premium for it. Sorry. But there's no emergency there. It's
let
just
the market
that
prices
Facts,
and mortgage
Mark
rates,
Pyers.
and you
You
put
are
those all
100%
together,
right on
and
that,
we've
bro.
got a disaster. I think President Trump wants to work on it, but I also want to talk about on the mortgage side how we got here, because over the course of the last 4 years under Joe Biden, the interest rate when he was inaugurated on the 30-year fix was 2.77%. It rose to 6.77% by July 18th of 24. It went back down in September of 24 to 6.08, but we've been bouncing around in these high ranges, making that prohibitive too for quite some time.
It was
Ladies, go and get with a man that is a part of the military that moved in certain places to where they don't have to pay property taxes. Women are looking for the wrong type of guys. Women are out here chasing scammers. They trying to chase a guy that got a high net worth, a rich man, and all of this stuff. Go and get you a man that ain't got to pay no property taxes. And leverage him. Leverage the marriage as a business. Learn to love him. Fall in love. Get with you a man that was in the military or something, and he moved to a place where he ain't got to pay property taxes. He can get that VA loan. Y'all can go ahead and start building wealth based off of that, and then you can run up a bag. Am I giving y'all too much sauce? Am I giving y'all too much sauce? Veterans should be in demand right now. Every woman in the world should be trying to get with a man that just came out of the military, the Navy, the Air Force, or something like that. Ferry, you considered it? You considered it? I'm telling you. Listen, it's all kind of life hacks. You know what life is? Life is just a life hack. Life is a life hack. I'm telling you. Life is a life hack. The minute that you start to figure out that you can hack it to your own benefit is when you break the mold. That's when you break the mold. You ain't got to pay property taxes, Nikki. You ain't got to pay property taxes. If I ever hit the market and I'm single, I'm getting with me a veteran woman. Yeah. Don't care how old she is. Don't care what she look like. You come out of the military, I'm going to find a home and a place where we ain't got to pay no property taxes, and we going to be living good. That would be the first thing on my list if I'm a person that's just a regular everyday person and I'm trying to make sure that I can leverage as much as I can from a business relationship. I'm going to go and get me a woman that came straight out of the military. What's up, baby? Oh, you a military chick? I know you was for the streets. I know that they was busting it down for a real one in the military. I know how y'all get down. Guess what? I don't even care about your body count. I ain't even tripping off of it. Ain't even tripping off of it. I know y'all was getting it down in them barracks. Listen, but you reformed though, right? Don't worry about it. I got you. You was in the military? Word? No. Yeah. What pay grade are you? I feel you. What state we in? Okay. Listen, you ready to go out to eat? You don't want to know more about? No, girl, I ain't thinking about that. I think the past should be the past. Get you a chick that was from the military. That way I ain't got to pay no property taxes. You ain't got no leg? Nah, don't worry about that. Don't even worry about that. Just because you ain't got no leg don't mean nothing. I know somebody that is an expert in prosthetics anyway. I do. I got a buddy that is an expert in prosthetics. He owns a prosthetic company here in Michigan. He does really well. I actually met him. I met him on my rooftop at a special event. I know a guy that runs a prosthetic company, and he does really, really well. And so me and his wife and him and Rita, we was all talking and stuff like that. And I said, what do you do? And he said, oh, we live downtown. We moved here from West Bloomfield, whatever. And I own a prosthetic company. I said, okay, cool. I got a guy that own a prosthetic company. Facts. That's a fact. Matter of fact, I think Rita still got that information. Let me see something.